Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July the 14th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, wave 1 is done, working on wave 2 down. Emil, Ian, James, Mr. Tucson, is this over? And we're ready to go blasting off, or are we still going to chop and grind a little lower, then blast off? Or do we go anywhere near our original target down here around that 618 off of the 2008 low up to the 2022 high? Do we get a 618 retracement around 87? Maybe push the limits toward that 786 down around 80. So remember, at some point, this wave 2 does end. And what happens? We go breaking out. So all roads lead to us breaking out. The question is this over? Well, the big picture, as long as we're below this pink box, we still have a chance. We could certainly go lower. And until we get above this pink box, we cannot call this wave 2 over with any high degree of certainty. Certainly not. So is this going to chop and grind, kind of like we did over here? Kind of had a nice push lower, then we chopped for a while, even year plus. This was back in 22, and by 24, we started to finally get that last push, and then we went lower. So is this like a mini-me of this bigger move here? This is the mini-me, where we chop sideways, pop, looked like we were going to break out, and then said, nope, we got to go lower low, chop sideways, pop. Is this the one? And we still go lower low. Well, this is why this is here. As long as we're below it, high probability until we get above that, then this is definitely over. But while we're below it, we still have a strong probability that we could still go lower. Fair enough? So jumping into the charting platform, we can see we did break an important level so far. This green line, which is right around that 100.5, and we've been testing that for well over a year now, back in April, May. So over a year now that we thought we were going to break it. No, we tried, nope. We came down again, made another low, tried again, failed, made another low, tried again a couple of times, failed, made another low, and we've been trying here, pull back, but we made a higher low, and then we finally broke it. Woohoo! That's good. Why did we stop? Right where this previous resistance is there. So it's interesting how we rallied right to those extensions, which happened to be the same battle zone as this prior move up here way back over a year ago. So this was former support, broke, bounced, went lower, retested as resistance. So this is still resistance. Remember what happened at this level below here? We did that a while. It looked like it was going to be support temporarily, but nope, resistance, 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 till we finally broke above. So is the question, are we converting this green line, which was former resistance for a while, and before that, it was support way over here. So we finally converted that back to support and we're ready to go breaking out? Maybe. But notice how we're retesting it as we speak. So we zoom in the other day, going in about a week or so ago, we talked about once we got to those extensions up here, expect the dollar index would give us a pullback. We got that, kind of went into the zone of that breakout, bounced a little bit, but we're still getting lower highs. So this to me does not say we're done, meaning we're probably going to get some more downside. Lower highs, lower low, lower high, lower low, and we're still getting that series of lower highs. So until we can break above this purple line and actually break this prior high, we're stuck. Because what's that prior high? Right there. That's that battle zone right there. So this is why when I was looking at this, we had several things going. A, from the recent high to low, we broke the 618, and we said we have a 75% chance we're going to go visit 101 and change, 70+% chance we'd go visit this 101.50 and change, and we did that. Then we said, well, the software is overbought. My weekly's overbought. My daily's overbought. We're reaching a resistance zone. So that's not conducive to this thing breaking out right now. It's more conducive to correction. So is this part of the back test correction? So typically once you reach extensions, what happens? You get a correction and you go back and test where you broke out from. If we don't hold that, then it's likely we're going to go push toward the magic fibbo, which happens to be the same area as my 618. So from that prior high to this prior low, we rallied, took that 618 out. So we did what? 75% chance we go to that 1448. 70 plus, we go to that 1272. And that's exactly what we did. So far, so good. Then we get a correction. So we came down, tried to test the back test of that. It bounced. We tested it again. It bounced, and we're still unable to break out of that lower high trend line. So as you zoom in on this, this is screaming that this isn't done. The likelihood this just goes ripping higher from here, it's possible, but this little scenario says we need a lower low. Fair enough? From that high to this low to that lower high, we need a lower low. Just like the last time we had that high to this low to this lower high, we need a lower low. Well, now we're doing it again based on the lower high scenario. So you can use your 3-point tool on this. And you can take that recent high down to this low to this most recent pop. So you can see we're due just to make this equality move. This is going to be my A, B, C correction. After what? This rally up, a 3-wave correction, and we're going to bounce and go on continuation to the upside. If that's what it's looking at, we still need some more downside. And that's looking around that 99, maybe 99 change. It gets a little feisty toward that magic fibbo. So this is still more likely we're going lower. The question is, once we go lower, do we hold this extension and pop from there to break a new high? Once we get above this guy, we're onward and upwards toward 102. And remember what's sitting at 102 is that short squeeze. From well over a year ago, we had this run and everything but the dollar. Go short the dollar, anything but the dollar. It's terrible. Debt, blah, blah, blah. We got so many trillions of dollars in debt. They're spending too much money, blah, blah, blah. You just need to short the dollar. So all the big money was shorting the dollar. Well, some of that's starting to alleviate on this bounce because we got close to that 102 area. We didn't reach it, but got close. So we may not get the dramatic push, the short squeeze I was looking for. But once we start to get above 102, we got a magnet up here right around that 104 and 107 level. You can see right there, 104, 107. And what is that? That's this high to the current low. That would be a 618 retracement. So Emil and others, I think if we start closing above 102, whether we officially call it the short squeeze or it's just getting sucked like a magnet toward that 104-ish, 105 level, I think we have a very good chance for this thing to grind higher toward the zone. But the reason I'm showing caution, even if we get that, and that's a big if, right? If we get that, we could still get a high, low, 618 retracement failure, lower low, right? So what's another reason I'm still cautious? I got several reasons that I'm cautious on this breakout. In the long term, am I cautious about breaking this headed to 130, 140, which is our target? Let me go out to a weekly and I'll pull this way back. There's the target. So let me clarify some things. I'm about 1,000% confident on a 100% scale. We're ultimately headed to that 120, 140 kind of sweet spot, about 130. That's where we're headed. No ifs, no buts, no ands. The question is, do we still need to make a lower low before we go up there? Or is this the beginning of where we start breaking and heading above this? And once we're above that pink box, it's over, in my humble opinion. So we get above this pink box, we're definitely going up here. And even then, it's probably going to be a multi-year type of stair step getting up there. So this is clearly where we're headed. So keep that in mind. Definitely where we're headed. But as we look back at the current price action, the reasons I'm still very cautious of this being the definite breakout here is for several reasons. A, this current price action here says we need a lower low. That's fine. We could get a lower low, which is still a higher low as we're stair stepping higher, but we definitely need a lower low in this to clean that up. Once we do we reverse from here to go breaking out? And even if we did that, can we get above this 104, 105, this pink box area to state that, yes, this is the low, and let's stick a fork in him, and we're onward and upwards toward that 120 to 140, aka 130 target? Not so fast. What does this look like here? This initial move from the low up to the high to this higher low to the higher high, that looks like an ABC type of move. First move up, A. Second move down, B. Next move up, C. Why does it look like an ABC instead of a 1-2? Because where we stopped. Use your 3.2. That low, that high, this higher low, we went right to equality / 1.272, where we hit the tracks and reversed. So as long as we stay below this high, which is that battle zone around that, near that 102, we start breaking below this green battle zone at 100.5. We're not far from it. We close below that, then we should get sucked and pulled toward the magic Fibbo in this 618 retracement. What is that 618 retracement, you ask? That is from this low up to the current high. That's my 618 retracement zone. So if we actually from this low to that high, 618's right there, they're kind of on top of each other. So it's this one right here where that green box is, and my 786 is right there. So you can see that this, if we break below this green line, we're likely going to test the magic Fibbo / 618 area. We break below that, we're going to go lower low. We go lower low here, then it sets the tone. We got to go lower low there. And what happens if we go one tick below 95.55? That wave 2 down there cannot be complete if we go one tick lower. So is this an ABC? Then the trend was down, 3-wave correction, we should go lower low, if that is what that is. So far, so good. And what else do we have going for it? The software is still overbought. And you come back over here and you go to the software, and we can see that we have some overbought conditions Let me click on that. Oh, I'm on the wrong one. Excuse me. Let me go back here. This one right here. The weekly's in overbought territory. It's starting to turn over. MPA PE5 version 5.0 software is overbought, turning over. We don't have a hook and a cross yet. We have a hook and a pinch. So if we're able to hook and cross, what does that mean? That means the daily is going to cycle all the way down. And what is my daily currently doing? It's in the process of starting to cycle down. So be careful. Engage, disengage. It's in the process of cycling down. So this is why we said the other day when we reached that extension up here, look for the dollar to start making a correction. Weekly overbought, daily overbought, likely going to get a push lower. So I don't think we're done yet. Even though we're back testing the breakout zone, it's possible we could bounce off of that and go higher. But based on the series of lower highs, it doesn't look like we're ready to do that. It looks more like we need to break lower and let the daily finish the cycle. Fair enough? All right. So back on that, what is those targets? Those targets based on this recent high, low, lower high would be somewhere around 100 to 99 and change. It. If it's an equality move, which again, if this is the beginning of a push higher, and now this is my correction, then we would expect some equality based on the first move down, correction, second move down. And I would put it somewhere around that 100/99 and change. And who's looming in that area? This magic fibbo. So, what did I say the other day? I said, be careful because we're just kind of chopping and grinding here. Sure, we could go breaking out, but weekly's overbought, starting to hook down on the software. The daily's overbought, pushing lower, and we're getting a series of lower highs. That kind of says we're going to go lower low. The next question is, we break and close below this green line. We should make a move toward the magic fibbo / this green box. Amen? What if we hit this area and we bounce? Could we go higher? Absolutely. We could break out and go higher. Make a move toward the big resistance zone just above, starting around that 105, 104 and change up to about 108. Any questions? So, are we going to do that? Get up here? Or what if we come down here, we don't hold, then that says we go lower low. We go lower low over here, that says we need to go lower low there. So one thing that you know about ABCs, right? Remember we talked about this could be the A, that could be the B, and this is the C. For proportions, it fits. So if that's my ABC, and Emil, James, Ian, we start breaking down back below this little support zone saying we're going lower low. We go lower low, which is this low over here, this bigger A, B, C. You break below the B level. That says we're going lower low than this guy. And what does that mean? We go lower low than that? That wave 2 cannot be done because one tick lower means it's not finished. It's still ongoing. And have we experienced that phenomenon before? Yeah. Was this the low we go breaking out? No, we went lower low. Is that the low we go breaking out? No, that's the lower low. Is this the lower low and we go breaking out? Well, we take this level out right there. It sets the tone. We're going lower low. Got it? So this is why these are some make or break levels. What's unique about this service is we give you a primary direction where we think it's headed, and then we give you make or break levels that sets the tone of where it's going to go thereafter with extremely high probability outcomes. So if we're able to fizzle down in here and not hold, and we go and break that low there, then this says we're going lower low. And that guy right there is one more of these. Is that the low we're breaking out? No, we went lower low. Is that the low we're breaking out? No, we went lower low. Is that the guy? We talked about all this chopping, overlapping, still says we got to go lower low. And even after this lower low, all this sort of looked kind of all right. We did a nice little move up, 618 retracement, stopped at the wrong area. So if this would have kept going way up here and pushed into the 102, 103 level, then this could certainly be a 1, 2 working on 3. But because this looks more like an ABC, because we stopped right here. So let me just remind you what that looks like. A equals C is your typical move, where your first leg up, A, will be the same type of move you get in the C wave. Or you get A times 1.272 extension equals C. And what did this thing do? It's exactly at a 1.272. So the structure and the proportions of the move fit at this juncture an ABC move. Why is that important? Because if that's truly an ABC move, then we need to go lower low. So far, so good. So that you see some cons and some pros, or could we be breaking out? The biggest con for us to go breaking out is we're definitely going to 130, right? It just may take another year or so, or it could take a few more months, but it's definitely likely we're going to 130. The question is this low right there the end, and we're working on that? Or is this going to end up with another one of these where we keep going lower low, we go lower low, we go lower low, and even after all this ABC, we go lower low, and the beat continues, where we just keep grinding lower lows. So please be careful. As long as we're below this high, we're likely going to push lower. This latest price action, zoom that way in, looking at the series of these lower highs with the software included, this looks like we still need to push lower to kind of clean that up. So far, so good. So I would not be buying going long here, because I do think we got some more unresolved downside pressure. And if we close below this green line, then the likelihood we're going to go visiting the 100/99 area is extremely high. We don't hold that zone and we break below that, then it says we go lower low. And who's sitting lower low? My extension, right? Look at my extension. So that's part of the A, the B, and the C. We got lower highs. We break below this green line. We go test this magic fibble in our support zone. We don't hold that. We go lower low. Got it? So if we're able to close below 99, which from that low to that high is my 618, what's the rule? We close below 99 with not just a wick down here, but a candle body, and we're not that far away. We close below that, then we have a 75% chance we're going to go visit 97, 70+% chance we go visit 96.50. Why is that important? In the inverse of this, when we had that high to this low, we said the same thing. You break this 99.50, we're going to go 75% chance we go to 101 and change, 70 plus we go to 101.50. And what did this thing do? Grinded, grunted, laboring rise, but it went right to those targets. So A, this doesn't look complete to the downside. My daily's turning over, my weekly's starting to hook lower. The likelihood we drift lower is very high. Once we close below the green line, it sets the tone. We're going to visit that 100/99 zone. We don't hold that 99 right there. We close below that, not a wick, but a candle body, and we're on a daily chart. So if I see a candle body close below 99, it now reverses this thing to say we got a 75% chance we're going to 97. Why is 97, that's 96.50 so important? Because it's below that swing point. Got it? And I need to compress that back for you so you can see, well, if this is my A, this is my B, and what did I just say? On the C up, we stop proportionately to be an ABC. Then when price finally breaks below this point, it sets the tone you're going lower low. Got it? So if this truly is an ABC, proportionate, it's there. The proportions fit for that to be an A, that again to be my B, and this up to stop where it did, right in that zone, that's C category. If this thing would have blown past 102.50 and higher, then this would look more like a 1, 2, 3. More impulsive with a 4 correction. You stay where the ones can't go in the area wave 1, and then we break out higher, and then we'd start to say, well, yeah, maybe this is the end of wave 2, because that looks very impulsive. So far, it looks corrective. So it's all about rubber meets the road now. Do we hold this support zone? We first close below this green line. We're going to go to this zone and get sucked into the magic Fibbo / support zone. We don't hold that. That then shifts the gear back to 75%. We're going to 97, 70 plus, we're going to 96.50, which is below this swing point. And the technical picture, if this is A, B, C, and we break below this low here, we're going lower low, period. Got it? All righty. So in the short term, would not be going long the dollar here. We need to go lower low. Sure, this could be a correction of a 618 from that low to that high. We get a 618 retracement, bounce and go higher. But it's all about once we close below the green line, we're going to go test that zone. And do we bounce from there to break out? Or do we pull one of those we did a while back, like over here? We started grinding higher. We did a 618 retracement. We bounced. But guess where we stopped? You look at that high to this low. That's a 618 retracement. We failed. And then we went lower low. So even if I were to see this thing rally from here down to this support zone to hold, bounce, it's still got to then go from that high to whatever that low is, break a 618 back to the upside. And just looking at this chart, Emil, let's just say we did that. This would be the high. We grind down here toward that 99, which is right in that area. We come down here in that 99 zone. And guess where that 618 is? It's right at this resistance zone. 100.6, 100.5. So what if, William Bruce, we get this correction down, this is this low to that high 618 bounce, and we're able to clear back above this big resistance zone, then it would set the tone. We're going to visit 102.60, maybe 103. But that's a big if. So it's all depending. If we end up breaking below this 99, it sets the tone. We're going lower low. And by going lower low than this guy, we're going lower low than that guy. So you'll hear my voice change. If we get a close below that level right there, the probability we go lower low is extremely high probability. So that would mean there's no way, just like that, I said it back then, I don't think that's the low. I don't think that's the low. I've been saying it for a while now. Every time we get a new low and it bounces, no, I don't think that's the breakout. Lower low. Nope, I don't think that's the one. This one, I still don't feel this is the one. When do I say this is the one? We get above that big pink box of resistance up there. We're below it, still have the pressure to go lower low. So in the interim, while we're still in the correction mode to go down, let's watch this green line. If we close below it, candle body, then expect it's going to push toward this magic Fibbo / green box. And you go, what is the green box? That's my 618, 786 zone of that low to that high. Basically the A, the B, and the C. That B bottom up to the C top, that would be my 618, 786 zone. So if we close below this, we're going to test that zone. We close below that, we're going to go down here. And by taking that low out, the probability we go lower low is off the charts. And we go one tick lower than that guy, wave two's not done. Fair enough? Well, what if you're more bullish? Well, again, the software saying we're going lower, resistance level, where this move stopped. We got a lot of puns or cons against why we think we're ready to go breaking out just yet. And let me throw one more in the mix to make it even more interesting. Go back to the COVID low over here. This COVID low up to that high where we topped out about almost 4 years ago, and we talked about this big wave two correction. When that happened, we what? Broke the 618 level on this bigger picture. From the COVID low up to that high, where this correction started from, we actually closed below that 98.50 area, 98.80, 98.50 zone. You see big candle bodies in here, not just wicks, but candle bodies. So that says we have a 75% chance we go and visit 85, and a 70 plus we're going to visit 82. This is nothing to just dismiss because no, look, it's very bullish. We can't break down anymore. There's no way we're going to get to these lower lows. Look at price action. That's what I'm talking about. This low, that high. The rule is you close below 618, you have a 75% chance you go into that 1448 extension. 70 plus, you go into the 1272 extension. So this is looming out here until it's not. When is this no longer viable for us to go down here? This would be off the table. These down here, that 85, 82 zone would be off the table if this rally gets above this pink box. Then we're offered to the races going in at 130, 140 target, and this would be off the table. But up until then, while we're below this pink box, this is still viable. So you add that to the mix. Software saying we need to go lower low for now. Technical picture over here on the hard right edge says we likely need to go lower low. This is looming. But remember, at some point, wave two does end and we go breaking out to our target up here in the stratosphere up here in that 130, 140. So again, this is a given in my humble opinion. We're definitely going there. Do we need another lower low first to get there? Or are we going to eventually break above the pink box and we get there? All roads lead to this. Whether we go lower low, we go in there. Whether we break out from here, we go in there. Or whether we go down to that 85, 82 zone we originally talked about, we're going there. So that's in the back of your mind. This is definitely where we're headed. But price has to prove that's where we're headed. I know we're going there, but we got to get above this pink box to say that this is the final move. It's done and we're breaking out, but we're not there yet. So in closing on the dollar, expect more chop and grind, puree style, Ron Popeil, dice-o-matic, chop, 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 chop. We got a series of lower highs on this latest breakout. So this says we're likely going lower low. If we don't hold that 618, this green box off of that initial move up, we don't hold that, then it says we're going lower low than this swing point, which the extensions are down here. And again, bottom line, you break this low right there. We break that low and close below, we're going lower low. Got it? What about to the upside? It's possible this could still hold that recent breakout zone, retest it, and we go breaking out, but we got to get above this 102. I would not take any bounce seriously till we initially get above that lower high trend line, and B, get above this prior swing point. So until we close above 102, then I think it's game on. You can go long because I think we're going to go visit that 105 area. We get below this 97. I know that's a big zone from 102 to 97, about 5 points. But we get below this, we're going lower low. We get above this 102, we're going to 105. So in the interim, expect a lot of chop and grind. So this is why if you're trading this, you need to be taking aggressive profits. not looming and sitting on this. I do expect we're breaking out to that 130-140, but we may need to go lower low still. And what I like about the COVID low over here in that scenario where we talked about this, I got to go out to my weekly to show it easily, but that COVID low and breaking that 618, this target right here, 85.82, is exactly what we called for 4 years ago when we talked about this breakout. Right here, it's reversal, and we're looking for this wave 2 correction. From that low to that high, guess who's sitting at that 85.82 zone? 618 retracement, 87. 786 retracement, 80. And where's 85.82 based on the COVID low? 618 extension, right in the neighborhood of where we originally talked about. That's pretty interesting to say the least. So I'm not trying to guarantee, Mr. Tucson, guarantee we got to go down in this 87.80 zone where those extensions 85.82 are before we break out. That could be, but that's why I originally talked about this zone being a likely target for that wave 2. But what happens when wave 2s are over? We go breaking out. So whether we break out now or we get closer to this target down here, we break out, or somewhere in between, we're still likely going to reverse somewhere in the original target to where we currently are. This thing is either breaking out now, we go lower low, we're going to break out, or we get to the zone we originally talked about, we're going to go breaking out, but all roads lead to that 130, 140. Fair enough? All righty. And again, the beautiful software says we're not done. My weekly's starting to turn over, my daily engage, disengage, blue's down, red starting to hook down, green starting to hook down. This is likely, even with this series of lower highs, we're likely going to get a push and get sucked and pulled into the cloud area. What does that mean? That over the coming days, expect this thing to grind down. Grunt and grind, engage, disengage, just work its way down, and this thing gets sucked and pulled toward that target right here. If you're using Ichimoku Cloud, which we love, the beauty of the software is with a weekly hook and across and a daily cycles down, this means you're above the cloud, you're going to get sucked and pulled into the cloud. And who's sitting there? That 99 target we talked about. And if we close below that 99 area, what does that mean? We're going lower low than that guy, which is my ABC. We go lower than that, which means we're ultimately headed lower low than that. And that means that wave 2 can't be done there. Okay? So what would it take for us to get down here? We're going to close below 99, basically break below this Ichimoku cloud. We do that. Says we're going to make a new low below this guy. And yes, we can make a new low, go up lower, high, lower, low. But eventually, by breaking that low, we need a no low below that. And that means that would likely be my weekly cycle down. And the weekly is doing what? It's turning over, beginning to hook over and cross. So we hadn't had official hook and a cross yet, but we got a hook. We're just about to get a cross with a pinch. So I'm watching that closely. What's unique about the software is you get a weekly hook and a cross with steep slope angle separation, the daily cycles. You get a monthly hook and a cross with steep slope angle separation, the weekly cycles. You get a 4-hour to hook and cross, the 1-hour cycle. You get a 1-hour to hook and cross, the 30 and the 15 cycle. You get a 15 to hook and cross, the 5 cycles. Get it? And why is that important for options traders? Because a daily takes about 2 to 5 weeks to cycle. A weekly takes about 2 to 5 months. So if I'm looking at an entity, stock, commodity, whatever, and I'm looking to play some options on that, and I get a monthly hook and a cross, that takes about 2 to 5 years for a monthly to cycle. But if my monthly hooks and crosses, and we know we're going to get a weekly to cycle, then I could play options out at least maybe 6 months, because it takes about 2 to 5 months minimum for that to cycle. So therefore, I would need plenty of time. I could take advantage of how long does it take for a cycle to occur. So my humble opinion, this thing still needs to go lower low, weekly starting to turn over. Daily's in the process of engaging, disengaging. So I would suspect this is going to end up cycling down in the coming days, cycling down. And this is going to ultimately close below that support zone. We get sucked and pulled into the cloud. If we can hold the cloud, bounce and go up, and we actually close below that 99 level we talked about, 98 level, excuse me, 98 level, then it sets the tone we're going lower low, and ultimately means we're going lower low than that. So back on the charting platform, this is what all that means. That low to that high, we broke that 618 for months. Weekly candles, even a monthly candle in here. So the likelihood this is still viable until it's not. When is this 85, 82 no longer viable? We get above this pink box. Got it? So until we get above that pink box, price proves its intention. This is still looming in the background. Then if that's not enough to keep you interested, you look at the current hard right edge, and what is the price action telling us? This is a series of lower highs, which says we likely need to go lower low. And notice these extensions down here are right where my magic Fibbo is located, right? Support zone magic Fibbo right there. What does that look like on that chart? That's the Ichimoku cloud. Happens all the time. It's amazing. And this isn't just your average Ichimoku cloud. This is the hook and cross MPA PE5 hook and cross Ichimoku cloud. And that's why it's designed that way. So if we're going to get this cycle down, we're going to get sucked and pulled down in this 99, maybe as low as 98. We get below the cloud at 98, then we go lower low. Fair enough, but you see that on the charting platform. And who's lining up? Fibbo's extensions. Magic Fibbo is this orangey line, and extensions. Got it? So is it possible we could get down here, bounce and go breaking out? Sure. We close below that, we go lower low, we go lower low and break this low. We're not done yet. And until we get above the pink box, this 85, 82 over here is still looming. All righty. So why is that important? It goes in with the dollar, euro dollar, pound dollar. We're bouncing again today. We got a little bit of a pullback. So if the dollar is likely going to grind lower, what do you think the euro is going to do? Inverse relationship. We're due to start testing the support zone back here in the magic Fibbo to the upside. Dollar, what did we just say? If we close below this little support zone, we're going to go test the magic Fibbo. Bottom line, if this plays out like expected, where we go hunting that magic Fibbo, guess what the euro dollar is going to do? The euro dollar is going to do the exact same thing, but in the inverse. This baby is going to go ripping higher toward that 115.80, 115.90 area. We break below and close above that. When the dollar closes below that and it goes lower low, then this is going to start to run up here to this zone. And if we break this high, like the dollar breaks that swing point, and this is the inverse of what we discussed, what if Emil, that this is my A, B, C, and we break the prior level, then we go higher high as the dollar would go lower low, and we'd be targeting 121, 122.50. Well, why am I still bullish on this? Because I'm still bearish on the dollar until it's not, even though I told you the dollar is going to go to 130, 140. Well, guess what happens when the dollar reaches 130, 140? The euro is going to be down here, and I probably got to go to a higher time frame. The euro is going to go down here, that 0.8, 0.7. What? Yeah. So when the dollar rips to 130, 140, this is going to decline down here to 0.8, 0.7. Got it? So why am I still bullish on the euro for now? Same rule. You take that high, you take this low. We tested the 618, got a correction, then we closed above it. What's the rule? From that high to that low, we ultimately had a candle body, not a wick, but a candle body that closed above that 618, that 112.80 area. Right? So that says we have a 75% chance we're going to 127.45. We have a 70+% chance we're going to 131, 130.99.6. Can't get any closer than 131 than that. Then later, see the 786, it's 117.50 area, 117.48. Later, we closed above that. So not only did we get a 75% chance we go and visit 127.45, and a 70 plus, we go to 131. Later, we close above the 786, which reconfirms over here, reconfirms we're going to 127.45, 131. So yes, as positive I am that we're definitely going to 0.8, 0.7, we probably need to go higher high first into these targets before we go lower low. What if I'm wrong? Then we get below this green support box, it's over. We break that low, we go lower low. Lower low than what? That 0.95, where 4 years ago, I didn't make a prediction. I love how everybody predicts. There's sites that predict. The weatherman predicts, the sports commentators, they predictions, my prediction, everybody and their brother predicts everything under the sun. Even my gardener predicts when the roses will bloom, et cetera, et cetera. So I don't predict. I leave that to the prophets. I anticipate. Why is the software called the Market Price Anticipator? Because it anticipates like I anticipate and have a God-given talent to read and interpret price. So, Emil, we get below this green support box. This is off the table. Stick a fork in him. He's done. Gone. Out of here. If we can't get up there first and we start whittling down and we don't hold the support zone, it's over. So we break below that little support right there. It's over, and that's a multi-thousand point move lower to get to that 0.8, 0.7. The probability we go down here, I'm 1,000% confident on a 100% scale. But based on that high, and I know you got nothing but lines there, but that high to this low, we took the 618 out there saying we're going up here. Later, we took the 786 reconfirming we're going up there. And as long as we're above this green area, we're going up there until we're not. And when are we not? We got to get below this green box. And the moment we get below this green box, what do? Short the daylights out of this thing for thousands of pips, headed down to 0.8, 0.7. Just like that anticipated move, no buy, sell, to hold recommendations. I can't tell you what to do, but 4 years ago in the archives, I said, bold statement, you might consider going long the euro dollar and the pound dollar because it's going to go up thousands of pips over the coming years. The question is this recent top out here over? Well, it kind of looked like it there. We're topping out here. Oh, it looks like it's just a small correction, Gary. I thought we were going to go higher. Then we got this correction, did a perfect 618 bounce, and we went on to the extensions. And now, because of that high to that low, this is still viable as long as we're above the green box, just like that 85, 82 lows on the dollar index is viable until we get above that 105, 108 zone. Well, here you have the equivalence of the euro in the inverse. Any questions? Pound dollar, same reasons. I think we got to go higher high on the pound. From that high to this low, the pound broke that 618 early in the ball. The euro took until 2025 to do it. This pound dollar broke above that 618 respectively in 23. saying we got a 75% chance we're going to 147 and change, 70 plus we're going to 152 and change. And then what did it later do? We tested the 786, pulled back, then we closed above. So not only did we confirm we're going there, we reconfirm by breaking the 786 we're going up there. And this target is viable until what? You know it's coming. When is this off the table? We're not going to get there. We break back below the green box and we go lower low, and lower low than low, that 103 is going to be 0.9, 0.8 zone. I'm 1,000% confident on 100% scale we're going to ultimately get down here. But do we need to get up to these extensions first before we do? As long as we're above the green box, those are very much viable. Got it? So let's go to the hard right edge. It's all about the hard right edge. It's all about all of it. Technical picture. So was this the end of that correction? We're ready to go blasting off? Well, we're already testing the magic fibbo on this pound dollar where the euro's not and the dollar index isn't yet. But what happens if the dollar breaks down to magic fibbo and the euro rallies up to its magic fibbo? This is going to rally up to this pink box. We break that, we're going to go higher high. En route to that COVID scenario, which again, I don't know if I can compress, yeah, barely get it in here on the daily, at 147, 152. So we've been talking about 4 years plus ago, I said the same thing. Hey, might be a good idea to go long here. This pound is going to go up thousands of pips. What have we done? Thousands of pips. Interesting. And could we go a little bit more? You betcha. As long as we're above the green box, this is still high probability. We get below the green box before we reach these targets, then they're off the table and we start targeting down here around that 0.9 to 0.8 zone. Guess I can slide that down a little bit more. And then, of course, we'd have to push this way over here because it could take a long time, another year plus or longer. This thing could grind up to those targets over the next year or so and take multiple years to get down here. But this is where we're headed. In my humble opinion, no ifs, no buts, no ands. The question is, do we got to get up to that extension first? As long as we're above the green box, we head to that extension. Then we start shorting the daylights out of this thing to not only head down thousands and thousands of pips, but once we get below the green box, we still got thousands of more to get to these extensions down here, 0.8, 0.9, 0.8 area. Please be careful on the euro, yen, pound yen. I've been saying it for weeks now, and we just kind of grinding and grunting and a laboring chop and slop. But the software is extremely overbought. This thing has just been grinding. After that run up, we need a deeper correction. And this latest price action kind of says we still need a lower low to kind of clean that up. Overlap, 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 overlap after the run up. So this is likely still going to give you a bigger correction. We're able to make 500 pips in one day off of that big candle down. And then we got to a position of authority and we just been right there, that big candle, and we just kind of been chopping. It's boring, watching grass grow, paint dry. But until we clear the hurdle, then we could potentially go up a little bit higher, but we did not so far. So the likelihood we're going to go lower low is still looming. So keep watching for your opportunities to sell rallies and get to a position of authority. But no matter how you trade in this thing, I would be getting aggressively taking profits. Pound yen was able to break the 618 zone. So where did it go? Exactly where we said, that 217, 218 zone. And look where it stopped in its tracks, right where we hit that target. So I would not be very bullish on buying the pound yen just now after we reach the extensions. We want to keep an eye on it. We're probably going to need to be already retesting the backside where we touch this, pull back, and we're retesting it. Is this ready to go breaking out? I'm not convinced we're going any higher until when. Use the same rules, and even on a smaller scale, you can stretch that way out. And guess where this thing rejected from? Look for this thing to go lower low. Why? Because I said so. No. But from that high to this low, we touched that 618, and so far we're rejecting it. Ooh. What does that tell you? High, low, 618 rejection zone, Akeem Olajuwon style, the human fly swatter. Go up the middle, you get rejected. So where's the potential target on this pound yen to the downside? Use your 3-point tool. We have a high, we have a low, and we have a lower high. I put it somewhere around that 215.90. It gets a little feisty, 215.40. So somewhere around that 215.90, 215.50 area, 45.50 area. Amen? So the likelihood this breaks out right now is low. The likelihood this chops and grinds and grunts and labors down looks higher probability. Until we close above that 618, what happens if price just ramps up there and we get a candle body close above there? Then we can target 218.20, 218.50. Rinse and repeat. We don't close above this and we break that low. Where are we going? Down there. We close above this with a candle body, we go up there. In the interim, I'd be in a position of authority, expecting more of this than a pop out. Only way I'm going long, I got to see it close above this area to shoot for about 100 points or so. Otherwise, I think we're going to break down a couple of 100 points. There you have it. Let's continue to look at one other thing. In the realm of this guy over here, we have this software we call the breakout pending orders. And for London traders, I love to trade the London session. It's at 2 o'clock in the morning, my time, 8 a.m. London. But this software automatically sets the high and the low. So you arm this baby to work. It'll say it's armed for the breakout for London. I like to trade euro or pound base pairs. Either one I do like. So this one, the other day we did this. We got 150 pips, hit 50 pips, 100 in class. Then it went on to hit the 150 pip zone. I set it again last night. And sure enough, it sets the tone at the end of that candle. It shoots the high and the low. The first hour of London trading, it'll automatically pop a high and low in there for you. Then as price breaks the low, it shorts. If price breaks the high, it'll go long and cancel the short. Does all that for you. And right now, we just missed the 50 pip zone. Look at it. Went right to it. And we would have had 50 pips on the market, but it didn't quite get there yet. So I'm just going to let it run. Either I get stopped out for a loss or I make my pips down here. Either way, I'm satisfied with it. Last time we set it, you can see over that, made big money, big money, big money. So is this still in a downtrend? Well, it is what it is. Eventually, this thing's going to go bouncing, but this looks good for this thing to push lower and finish it up, but it's automatically there. What happens when you hit your take profit one, your stop loss goes into profit. And this guy, the reason it's not running right now, we hit the 50 pip target, and then they had a big reversal, then pipped us out for more profit. So that's why it's no longer running. So how would you like to set something automatically, wake up and you got money in the bank? Not too bad. So the last several of these, you can see we hit the big ones the other day, and I don't always set it every night, but it just depends on what you're trying to accomplish. But you just set it. It is the MPA PE5 breakout pending order, and we have templates for your ease and convenience. So you come over here to your template. We got a bunch of them for you, but it's this breakout light blue, which is this one, and a breakout white, which is that other one. And you simply just click that, click this ready to trade mode. It'll say it's arm ready to go. And you can just let it anytime in the evening for that London breakout session. You set it up. So what if I'm not in the US, I'm in some other time zone? It's in the software. You go into your indicator list. Let me get out of that. Lost connection on this. 1 second. Well, anyway, I'm all into it, but you got your templates, got everything you need, and we should be good to go on that. Come over here also, just as a reminder, we have NinjaTrader. So that's still setting up. I'm going to let this baby continue to run. So that's in there. We also have NinjaTrader as an opportunity for you to use the same software. Be careful on Bitcoin. Yes, we might get a little of this part of this little bounce, but I'm expecting this to continue down to its 50,000, 30,000 zone. And I'm going to wait till my monthly gets oversold. Monthly time frame. I want to see the monthly get oversold. Yep, I did lose connection. So 1 second while I fix that. And log back in, monthly, weekly. Let me fix that. But my connection lost in a second. There you go. Make sure you're logged in. And the weekly's setting up for a potential bounce, but the monthly still got more downside. So Mr. Tucson, what does that tell me? Man, I'm salivating for when this baby finishes that monthly cycle down and price gets down to this 50 to 30,000 range, and my monthly is going to be oversold and it starts turning up. It's going to be oversold, turning up like we did in 2022. Same thing. What did we say? Man, opportunity to buy this below 20,000 is a steal of a deal. Boom. What's happening? Every 4 years, you get a crypto halving. We have a halving in 2028. We're going to bottom, probably my time zone for that's like October, give or take. And any moment we hit 50,000, I'm buying some Bitcoin. It hits 40,000, I'm buying more. If it could push into the 30s, I'm buying a lot more. We'll go over more of that in a moment. But I'm just showing you have the software in this platform as well for NinjaTrader 8. So let's go to the markets. And Emil has a question. If we could look at COPX, yes, I will. Let me do this SPX and EX, ESY, etc. So let me do that first. This is the futures. And some people may not know what ES is. It's the S&P mini futures. Why do I look at futures? Because you get overnight price action. You can break this down and you can see all the candles that are in here. When you go to SPX, you get these gap ups, gaps down. When the market closed, there's no price action. The market reopens, it gaps or gaps down, etc. So you're missing a lot of price action in here when the market opens and closes, where futures trade 23 hours a day, 6 days a week. Only day it's theoretically closed is Saturday. Sunday afternoon it opens, Friday afternoon it closes. So you get the Saturday off. But other than that, you pretty much have price action to fill the bean. I'd be careful on the ES. We're still kind of struggling in a lot of corrective action. I don't like the way this looks so far. We've been getting a series of high. We thought we were going to break. Well, that looks 3-wave down. This looks 3 waves up. And we're just kind of chopping sideways grind. Is it possible we could go breaking out and go to all-time highs? Yes, but you can see we have that long series of lower highs. Look at SPX. It's even more obvious. We got a series of lower highs in here. We had a more strenuous series of lower high. We did kind of break it temporarily, but we're still in that reversal zone until we can clear this hurdle. Then we could potentially go higher high. So I'd be very cautious. What are my targets? 76.20, 76.50 up there. Is it a guarantee we're going there? No, because we're stuck in this zone and it looks like it's potential, but even the NASDAQ is looking worse. We got a series of lower highs. This thing is looking pretty gnarly. And as long as we have these series of lower highs, that kind of says we got to go lower low, set this tone up to clean all this chop and slop up. So be careful on the markets. If you're trading long and you're up 300 points today, I would definitely be aggressively taking profits because we certainly could be down 300 points tomorrow. It's been a chop and a grind. But until we can break this in this support zone, resistance zone up here, then NASDAQ could go visiting all-time highs again. But this overlapping chopping action really looks like we need another lower low. And as long as this continues, expect any rallies should be sold and take aggressive profits either way. If you're trading long, take aggressive profit. If you're trading short, take aggressive profit, because this corrective action is tricky and choppy, and look for some potential lower lows as long as we're below this zone. Otherwise, we break the zone, then we go shooting for all-time highs and the targets. I've been talking about, again, here's NQ, same type of thing. That doesn't look extremely bullish right now. Series of lower highs, little fake breakout, still getting lower lows. We're still at lower highs, so this is still looking like we need one more push below that low. Big run up, corrective, clean it up by getting a lower low, sets the tone. We could go blasting off into the end of the year type of thing. So is this the fall and the fall still unfolding? Possibly. But this does not give me warm and fuzzy, even though we're up a nice little chunk today, for this to be the breakout where we're going up thousands of points. Still think we could probably need to go lower low to clean up all this overlapping chopping action. And remember the last time I said that, let's go out to a daily. I said this way back in October of last year when it made that high and started chopping sideways. We pull that into perspective. Over here, when we had that prior high, we had all this chopping and overlapping, and it looked like it was going to break a new high, and it did not. Still was at a lower high. And what did I keep saying for weeks and weeks and weeks and weeks and weeks and weeks? Any rally should be sold because we really need a lower low to clean this up before we go up. And that was in April. Talk about salivate when we hit April. So this thing is going to go ripping higher. I expected it to go retest the highs, maybe make slight higher highs. We got way more than that. But what does this similarly look like? I mean, this does that, does it not? Goes on a big run. You get some chopping and overlapping. Got to get a lower low. Chopping and overlapping. Got to get that lower low. See it? Then it went breaking out new highs. We hit October. We got the same kind of thing. Chop, overlap, chop, overlap. Looked like it wanted to break out. Still at a lower high. I said, nope. Really need a lower low before we go breaking out to new highs. So it's been doing it. Rinse and repeat. Rinse and repeat. So I still think we got to have some more downside before we can go blasting off. If I'm wrong, then we got to close above that 618786 zone, break that lower high trending line, then it sets the tone to go higher high. But if, ladies and gentlemen, we can get this either daily magic Fibbo visit, we don't hold that, we're going to go to the weekly. But the last time we visited the weekly was Liberation Day low over there. Man, if we can get that again, this sets this thing for a stratospheric type of move into next year. Massive move higher. And I'm not trying to tell you, yeah, you better go short because we're going down thousands of points. We're going to go visit the fall in the fall. But if the technical picture still plays out, and I'm able to see this type of move, that low up to that high, we get a 618 retracement. We bounce off of that, and we call this a combo meal. It's a 618 retracement / the magic Fibbos in the same area. where we touch the 618, bounce off the magic Fibbo combo meal, then this thing has the potential to push into the mid 40,000. Sounds insane. If we can get that sell-off into the fall and we'd be in the mid 20s, we could have a potential double going into next year. Massive move. And that could be that massive blow off top we're looking for before the big next financial crisis hits. Dot-com bubble burst happened in the past. We've seen it with the 2007 financial crisis, the COVID shutdown kind of thing. Well, this one's going to be gnarly. When it finally happens, will it be the commercial real estate 5 trillion bubble that bursts? Will it be the AI, all that trillions of dollars they're spending on that, and then it doesn't come to pass, where all those bills are due and we get a big bubble that bursts there? It's going to be something, but it's in the cards that we get that blow off top, look out below. Amen? So the next financial crisis is not a matter of when, not a matter of if, it's a matter of when. And right now, I don't think this thing's ready to go blasting off up here yet. We need a bigger correction. Either we get to this zone, we don't hold that, we go to the weekly, and who's sitting in this little support zone? My daily area. So Mr. Tucson, what would look better? We get a correction toward the daily, potentially set us up for another higher high. Or we get the deeper one, we don't hold that support zone. So we break below the magic Fibbo, we go test the 618 zone. We don't hold that. We go to the extension lower low. Can't make this stuff up. See the extension? That low, that high, there's my 618786 zone, which represents by that green box. We close below that zone. We're going lower low to the extension. And who's sitting right at that lower low? That weekly magic Fibbo. It's kind of in the cards for us to do it, but we got to have price prove it so far. So back to current price action. This does not look very bullish right now. We're getting a series of lower highs, and you say, well, we're getting some higher lows in here. That's a seed squeeze. And typically, could that be an ending diagonal or a flag, and we need a bigger correction? That looks better because of all this overlapping chopping. Lower low would be good, just like we got that one before the big run up. So I would say we're probably still likely going to go visit the daily magic Fibbo. We don't hold that, we go to the 618 zone. We don't hold that, we go lower low. And that would be beautiful if we can get down there and say October, and we're sitting down there around that weekly magic Fibbo. Then I'll salivate to buy like we did in April to buy. Maybe we'll do it again in October. All I can say is, what if William Bruce, this thing starts selling off and we're down at another lower low and we're sitting here in the fall, bouncing off that 618, bouncing off that weekly magic Fibbo, salivate to buy this thing, because that could set the tone for us to go stratospheric into the 30,000s, maybe even push 40. Wow. Any questions? So back to ES. Be careful with this. This could be the CPI trap. What's the CPI trap? Never heard of a CPI trap? That's the CPI we got this morning. That looked pretty good, right? A little better than expected. Gas prices were coming down. They expected to see some CPI inflation go down a little bit, and we got better than expected. Negative 0.1, we got negative 0.4. Year over year from 4.2, the consensus was 3.8, we got 3.5. X food and energy 0.2, we actually got 0.000, and X food and energy 2.9, expected about the same. We actually went a little lower. So this was the initial pop in the market thing. Ooh, lower CPI, inflationary pressure. We continue to see inflation go down, then the Fed can cut rates. Well, I think it's a trap that the market's bounced on that, but inflation is not over yet. Gas prices are probably going to start inching back up, which we'll go over that in a moment, but that goes against every fiber in the United States for us to raise gas prices because of global gas and the price of oil has nothing to do with our gas prices. Why? We have more oil and gas than we ever have. As far as oil, we're pumping more than we ever have. We're pumping 2 times the amount of Russia and Saudi Arabia combined. Then you throw in Venezuela, we get in millions and millions and millions of barrels out of that. So we have a glut of oil. So our prices should have never gone up, regardless of what's going on in Iran and the Strait of Hormuz. Those Iranians in power, as far as the IRG, et cetera, those people are insane. So I digress. But when you supply and demand says you have more supply than you need, prices should come down. Well, just because the deal in Iran, we don't get our oil from the Strait of Hormuz. We pump our own. Now with Venezuela, we got more than we know what to do with. We're drowning in oil. So why is our gas prices going up? But inflation is not done. So with still the bombing going on, et cetera, this could force oil prices to go higher again, and that could put inflationary pressure. This little trap being, it looked like it printed down, but that could reverse very quickly, and it's more likely they're going to have to raise rates than cut rates. Why do I say that? We have this little scale over here. It's called the 2-year maturity rate. DGS2 is the 2-year maturity rate. You see it, 2-year maturity rate right there. And we look at the Fed rate, which is this gold line or yellow line. And what's the problem? We don't have room to cut rates. Here's our current rate. We cut it by 25 basis points, for example. We're going to be down here, and look where 2-year maturity rate is. What does all this mean? Go out on the bigger picture, and you can see what happens. This was the dot-com bubble burst. When this baby started ripping higher, the Fed had to raise rates. Then when we got the financial crisis, this baby went tumbling, so the Fed had to cut rates. So you always thought the Fed makes the decision if they're going to raise or cut rates? No, they follow the 2-year maturity rate. When the blue line races off, Fed has to raise rate. When the blue line tanks down and starts ripping lower, Fed has to cut rates. So what is this picture telling us right now? Here's the Fed rate. Here's the maturity rate. Where are they going to cut? They can't. They can raise rates. Yeah, we got room to raise rates right now, especially if this blue line keeps taking off. No question he's going to be raising rates. But rate cuts are totally off the table right now. Just can't do it. We're too far above where the current rate is to cut rates. So as it keeps running off, what do we do when it runs off? We raise rates. Amen? So NASDAQ and all is very, especially NASDAQ and tech is sensitive on interest rates. We start raising rates, it's going to put a little whipping on NASDAQ. That could be part of the fall in the fall. And then once they know we're going to, they like certainty. Well, Gary, does that mean the NASDAQ can't rally when we're in an interest rate hike scenario? Sure it can. It's about knowing what's going down. When the markets want to see a price cut and all of a sudden it's changed where it's going to be rate hikes, then it hurts the markets, the uncertainty. Once it's certain of what's going on, then it can recover. So even with that scenario where they start raising rate, if it's known every next few cycles we're going to raise rate, then we can rally again. But I want to see that correction in that last blow off top. And maybe this is part of that we get that last push into higher rates. And then we get the Elizabeth, I'm coming to join you, honey, financial crisis. But here was COVID, 2007 financial crisis. And before that, the dot-com bubble burst. Got it? So this is why I'm watching this. And we've been pretty good about this in class. When we come up to a rate where they're going to cut, they're going to raise, they're going to leave it alone. We look at this little chart and say, this is my opinion. And we've been spot on pretty much every time so far. So if this keeps running away, what are they going to do? Raise rates. There's no way they can cut rates. That's off the table for now until this thing goes plummeting lower and we actually start getting where we are in the Fed rate. We need to be below that before the Fed starts cutting rates again. Amen? So let me zoom that in on a daily for you, and it makes it look even more outrageously impossible for them to cut rates. Because what are we saying? This guy has to get below the Fed rate. And even when they were cutting rates, because this was going a little lower, then we went sideways. The Fed held rates and we were still lower. Well, no way they're going to cut rates right now because we're too far above it. We got to get below it. And even when we're slightly below it, they can still hold rates. But if this thing starts tanking, like maybe it's the financial crisis, Elizabeth, I'm coming to join you, then yes, the Fed can cut rates. But where it stands now, unless this blue maturity rate starts crumbling and gets lower low and breaks below the current Fed rate, and why is it 3.62? The Fed rate's not at 3.63 because it's 3.75, 3.5, and the blend of that is right at 3.63. Got it? So, is this thing going to go lower? This thing's been grinding higher. So, what if this thing turns and goes up there? We're raising rates. We're too far away. So, we start getting into the 4.5, maybe 4.6 up there, a full point away. Then it really puts pressure on the Fed to raise quarter point, another quarter point, maybe a third quarter point. If that keeps going higher, they're going to have to keep raising rates. All right. All righty. So let me finish up. Any questions on the NASDAQ futures, etc.? So again, I'd be very careful. Yes, it looks pretty bullish so far. CPI is low, but then you come over here to black gold Texas T. If this thing can start plummeting again, maybe we could see this thing continue to take off. But this thing could very much turn into some disaster very quickly. And I still want to see, can we hold above this magic Fibbo? That's a 4-hour. On a daily, we're testing it. So I'm watching this today, Mr. Tucson, others. Harold, are we going to get rejected here and start pushing back, retest the breakout lower high trend line, lower over here? Or are we going to go breaking out? This is going to be very important where this closes today. And if it closes and we start being rejected, then I expect to go lower low. If the thing starts closing above, then I expect it to go test up at that 90 to, 90 to 97 range. Close above here, we're likely going to do the prior high to low, little 618 type of retracement. We get rejected here, we're probably going to go lower low, and that would be that lower high trend line. But if this thing holds and we start getting above this zone, then what's on the table is that 150 to as high as insanely 250. What would that do to our inflationary pressures if we pop to 150 or even 250? That is on the cards potentially. All we got to do is let these insane people continue to bomb ships going through the Strait of Hormuz. It's funny how they think they can control it. They have no Navy left. They have very little air defense, anything. They got very little. They got a few rockets and maybe a couple of launchers. And they got their little, Boston whalers and AK-47s. They're trying to stop the shipping lane. Well, we had it. President Trump said enough of that. They're going to go against our Navy with a Boston whaler and an AK-47. I mean, come on, these people are insane. I digress, but Ian, we could be at 150. This is not out of the question. This euphoria continues. Maybe they bomb some of their counterparts, Saudi Arabia's oil wells, or anything could go down. And that thing could go ripping up here. So be careful. But rubber meets the road today. Can we break that magic fibbo on a daily chart, which you see we're testing? Very important, whether we close above or we get rejected. Then, of course, you got this latest little bounce. You know where we're going with this. Harold, we got that low. We have the current high. And if we get rejected here, it would close back below that 7270 range, which would be 618786. Then we're going lower low. And where would that be? So if we get rejected here, we don't hold that 72 and change 70 area, which is 618786. Then we're going lower low, and lower low equals down here, that lower high trend line back test. And how did I go from the markets to that? Because it has to do with the Fed's potential rate direction. And we keep inflationary pressure by having high oil prices, then it's going to force them to raise rates, and that could help have this sell off much greater. So is this a CPI trap? Got a nice little bounce off of that. CPI pretty low. Ooh, does that mean the Fed's going to cut rates? No. This says not even close, right? Not even close. And I always do that. I didn't mean, no, it's over here. I did. Yeah, I did do that. So good news is I didn't mean to click this on my DGS2 chart. So I'll show you how you bring that up. DGS2, 2-year maturity rate. Click on that. Then you go in here and you got the Fed fund rate. So you would add the plus sign. I already have it on there. See, it's there. Fed fund rate, FEDFUNDS. And you click that. And now this is the chart of interest. And again, while your Fed rate's down here and our maturity rate's up there, no way, shape, or form are they cutting rates. This continues higher, we're raising rates, period. What else do I like to look at? Nikkei, this is my global liquidity. Let's do it over here. My global liquidity proxy. Nikkei. It too is not looking good. It looks like we need more pullback. Series of lower highs, chopping, overlapping, had a big run up, chopping, overlapping, chopping, overlapping, chopping, overlapping. Still looks like we need to go lower low. I'd love to see a visit of the 60,000 range. Why would that be a good area for us to potentially bounce from if we go and visit it? You use the swing point low up to the swing point high, and guess who's sitting there, Mr. Tucson? Right there, Harold. 618 right at the magic fib on a daily chart. So why is global liquidity important? When global liquidity gets sucked out, our markets go down. High yielding, like ES, NASDAQ, Bitcoin, gold, some of those things, they tend to go down. So I don't expect if this thing goes plummeting lower, ES is going to go breaking out. NASDAQ is going to go breaking out. Bitcoin is going to go breaking out. Global liquidity is growing. Our markets can grow. Global liquidity is being sucked up and used. Our market's going to pull back. You remember Liberation Day low? Look how we went up here from 41,000 down to 30,000. Big suck down. And then this was the carry trade unwind is what they called it. But we had the same big suck down into that area. On our markets, when the global liquidity gets sucked down, so too does our markets. Got it? Everybody feeling me? So I call this Liberation Day low, but the global liquidity got sucked down. And then we went blasting off. And what did our markets do since then? It's been ripping higher too. So I don't trade this necessarily. I use it as a proxy for global liquidity. In latest price action, we get a run. We need a correction. We got a run. We need a bigger correction. So this looks like we certainly need some more downside. And again, what if it does? and this baby goes dropping another 8,000 points or so, ES is going to be pulled down, NASDAQ is going to be pulled down, probably the Russell will be pulled down, maybe even Dow, Bitcoin, etc. Gets sucked down with it. So I'm watching this very closely. So until we can get this blasting off again, I'd like to see at least a daily Magic Fibbo visit. We don't hold that. We can go to the weekly Magic Fibbo, and then that could set up some stratospheric type of move into next year, but we're not there yet. Is this the fall in the fall we're working on? Maybe. So in closing on ES, just to bring it all back and wrap it up in a bow, I'd be very cautious on this breakout right now. We're still at lower highs. The CPI did print nicely, which gave a little oomph this morning. But again, oil prices are way back up now. They were coming down. Now they're bouncing a little bit. If that baby takes off, then inflation's going to take off again. And the next CPI is going to go way back up again. So this could be that little trap. And we need a little bit more correction. This does not look like it's finished and we're ready to go breaking out. This looks overlapping. And again, since April, I was the biggest proponent. You might want to consider going long here after we got the lower low correction. This setting up for us to go higher high. I was very bullish there, right? Now, after that massive overkill to the upside, that correction on that, it looks impulsive and it doesn't look complete. And now we're getting a series of lower highs that still says lower low. At least the daily Fibbo, we don't hold that. We got the 618, we don't hold that. We go lower low. And again, you can't make this up, Harold. We break the 618. Well, first the Magic Fibbo. We close below that. We're going to test this. We end up closing below that 68 level. Then we're likely going lower low, 75% chance, 70+% chance. And who's sitting at those extensions? Weekly Magic Fibbo. It's like perfect. So am I trying to tell you, I guarantee we're going down here by October, we should be sitting down here. Certainly could, but I'm not saying it's a definite. Just take it one day at a time, one trade at a time, and take aggressive profits, whether I'm long or short. I've been taking aggressive profits. We get those swings, and we have a big pop one day, we get a big drop the next day, and this overlapping chopping action is not conducive to just ripping higher. Hey, it is what it is. We close above, we target 77, 77.50. We don't, and we don't hold this little zone. We look for lower low, and because of this initial move down and this corrective overlap, this really looks like we need a lower low. And again, after that run up out of a cannon, that was a hell of a run. Really need more of a correction to fix that up, to set up the blow off top going into next year. And I would personally like to see a much deeper correction, because after all this, make a lower low here would be ideal. Get to those extensions. All I can say is, Emil, what happens if we close below from that low up to that high? We close below that 68 level. Candle body, not a wick, but a candle body. I'm looking for this thing to go down several hundred more points. Go visiting the weekly Magic Fibbo. We get to the weekly Magic Fibbo, then I back the truck up and look for a massive run going into next year. Otherwise, if this is a continuation, be very careful, because yes, we close above that little lower high trend line. We should go up to 77, maybe 77.50. We're only talking a limited amount of upside when we have a lot of potential downside. Just to get to the daily Magic Fibbo, you're talking 400 points versus maybe 100 points or so to get here. 400 points more likely down here. So I still think this chopping and overlapping needs a deeper correction. We don't hold that, we do the 618 zone. We don't hold that, we go lower low. And say hello to my little friend down here on the weekly Magic Fibbo. NASDAQ is the same, even less bullish, clearly lower highs. Yes, we're holding in the last ditched effort. We dipped into the support zone. If we were to close down here instead of had a wick, that would set we're going lower low. Still think the same picture after that massive run up, this chop and overlap. We really need a lower low to fix this thing. So that's where the daily comes in. We don't hold the daily, we do the 618 zone. We don't hold that, then it's weekly magic fibbo and this one as well, which is sitting right in that zone. Got it? So Emil, what's that? We got the low, we got the high. We break and close below 26,000. I know it's a few thousand points, but if we close below 26,000, it says we go and visit 21.8, maybe 27, 20,007, which is right where my magic fibbo is on a weekly. And all I could say is, what if we're down here and say the fall, October? What would I be doing? Looking for the next big run to the upside. And Emil asks, can we look at COPX? COPX ETF and consolidation after the big run up. Kind of saying the same thing here, Emil, with gold. I still think gold's probably going to give us that last little sell-off. Silver, the same type of thing. So this is a nice run up. And we got initial push down. We're chopping and overlapping. We got a higher low. Doesn't look that great because this looks like more three-wave up. This looks kind of like three-wave down. So we got the run. Now we got this correction, and all you see is a bunch of red line. If you look at a three-wave up, three-wave down, that's corrective and corrective. There's definitely a big question mark here. But this thing would look better with that initial move up, chopping and overlapping. We get a swing point low. Then we can look for the next push. So let's take a look at that on NinjaTrader. Come over here. I'll do the UNHG one. COPX. Throw some software in the mix. And yes, still got the slight higher low. We're kind of testing the magic fibbo. Yes, there's a little bit of upside pressure, but the chart really needs a little bit more correction. The weekly still kind of pushing lower. So this would kind of be an ideal scenario. We got the big run up. We're chopping and overlapping. We really need a new swing point low that would clear this up. And if you look at the extensions, come over here to your drawing tools, and we go to the MPA magic fibbo right there, fibbo retracement, and we have that low up to that high. This would be a beautiful thing here, Emil. We get the weekly to finish the cycle down. We get price action just to chop and grind and get sucked down toward that 618 retracement slash magic fibbo. Weekly oversold. We're pushing somewhere around that 56-ish range. Let me get that out of the way for a second. 56 range. So we don't have to go that low, but a lower low would be better. So we get any type of lower low would be nibble time. We do get an over push down toward that 618 combo bounce. Then that really excites me to the upside because you know what's coming. You come over here, you go to your drawing tool. All this is a part of the MPA PE5 version 5.0 software. On NinjaTrader, you get the Fibonacci extension, and you have this low, you have that high, and you get this lower high, or excuse me, higher low. So let's say we do come down at 618 magic fibbo combo bounce. At the same time, over the next week or so, we get this baby just to push lower, get oversold, do a nice reversal like we did on that last move. Beautiful. And what would my extensions look like? So I'm going to take these red arrows off. So we can get down here into the mid 50s or so. Just a lower low is all we need. I would like to see a lower low. Lower low than what? Let me find that. My data box. And move that over just a touch. That low right there is 68. So anything below 68.50 would be good. Preferably even a little bit overshoot down toward the bottom of the magic fibbo. I mean, to touch the magic fibbo, a 618 retracement. Then we can look for the potential of 169. I like it. I like it a lot. So we get the 618 magic fibbo weekly combo bounce. Weekly finishes the cycle. And then we go potentially to 169. What would be my first target? First target 126, 136. Let's just keep it in the sixes. 146, 169. Based on extensions. So is it possible we could go breaking out from here? Sure. But this engaged, disengaged, we kind of engaged here, we disengaged. We haven't made a new low. We remember the rule when we got engaged, disengaged. We kind of go down, we engage, we disengage. We did it here, made a lower high, made a lower low. Then we disengaged and re-engaged. We made another lower high. We didn't quite make the lower low yet, but this would look a lot better having that weekly finish that cycle. And let me just check what the monthly looks like. I don't know if we got enough data on there, but maybe. Yeah. And the monthly's still kind of turning over. So it still looks like we have a good chance for this baby ultimately to go slingshotting higher. But I would like to see the weekly finish the down cycle to start it back up and then force this baby to slingshot higher and then kabloomy. Not to say we're going that low. That's not what I'm trying to imply. But if we can get a lower low off of that daily, then we're good to go. So anything lower than that 60, what did we say it was? 68.50. Let me go back to my data box. Anything lower low than that guy, and that was 68.49, 68.50. I was right. So anything lower than that could be a good nibble zone. And what could this look like? Just engage back over, forcing the weekly to finish the cycle. As the weekly pushes, the daily cycles and slingshots lower and lower and lower. So could we get it? Yes. And I'm watching this closely. We got a resistance zone up here. So when will we take this potential rally seriously? Use another one. If this isn't enough lines on here, go back to the drawing tools. Now you know why it looks like that on my charting platform. And we do Fibonacci retracement. And we say, okay, prove it to me. Whether we use this swing point or that one, they're both pretty close. Let's just even use this one for the lowercase scenario. Got that high, got this low. We need to close above 87. Close above 87, above the cloud, then could potentially say we're going toward 94, 97. But again, based on what we're seeing, this overlap, one more lower low would really look better. Beautiful run up, chopping, overlapping. Give us the lower low to clean this up to set the tone for the big move higher. Fair enough? All righty. Okay, let's continue back to the charting platform. But if we could get something like that, and we go dipping just a little bit further, set up that combo bounce meal, weekly oversold. But any moment we get lower than the previous low, that'll clean this up enough to warrant a new higher high. And if we get the overshot down, and why do I like the proportions for this? Remember that 3.2? You got the high, you got the low, you got the lower high. Look at the equivalence of an A, B, C. So at least 62 would be ideal. Anything lower than that 68 is good, but 62 for equality, or we do the 1272, which that magic fibbo is right in that zone. That's still the measurements of an ABC correction after that would warrant the next big run up. Everybody good? Sound good? So set an alert. Anything under 68.50, I want to know. And if it gets sucked and pulled a few dollars lower toward that magic fibbo, which is sloping upwards, and I look at the software and the weekly's oversold, ready to go, boom, shakalaka. No buy, sell to hold, but that is definitely setting up for the next big run. And that brings us back to black gold, Texas T. Here's gold. Since we were talking about copper, so why do I think gold needs another squirt lower? It would make it look better. We got the lower low over here, but this still looks like this chopping and overlapping still looks like we need another push lower. So I'm still thinking 3,800's ideal. Anything lower than 38, add. Anything lower than that, back it up, because gold's going to do the same thing. And if you like some ETFs or some leveraged products, I like the miners on these too. There are 3 of them I'm watching. One of them is Barrick. I already talked about that one. So this would look better with this chop, get one more push lower. That would be ideal. And we got the big run up, the correction. If we can get somewhere around this 30 buck range, a few more dollars down, that would be a good opportunity to buy and look for this thing to go stratospheric. And if we can do that 618 type of bounce, see where my weekly's located? Oh yeah. Maybe we get the same kind of thing on this. Barrick is sitting there. We're right around 29, but 30 is just right there, and this is sloping upward. So we're just trying to chop and grind down over the next several weeks or few weeks. Gold pushes lower, the copper, etc., pushes lower, and we get these baby to push, and we get a 618 / magic combo bounce, combo meal. This thing could potentially, like we showed you on COPX, this could set up potentially of 91 up there. And we could be buying in at 30, a triple. I like it. I like it a lot. So would it be ridiculous to buy some shares now at 36 bucks? No, but I like to buy them at 30 a lot better. So if I bought some at 36 and it goes to 30, what do? Panic? No, buy more. Dollar cost average. This thing is due to go in the 70s to 90s. I do think we're going to get up there when gold makes its big run on the next big run. This thing's going to easily make it up into this zone. Amen. And we can get down to 30. We're talking a triple potential. As gold's going to head to 7 to 10,000, this thing's going to go ripping. And this doesn't mean we stop here. This thing can go parabolic and start pushing in 120. But this is an extremely high probability target. The only question is, I still want to see one last push lower. Ideally, if we could run into that weekly magic fibbo, 618 combo bounce, and my weekly's oversold like COPX, that sets up that one. The previous one we did was Newmont. We made a nice little chunk of change on that one. Remember when we talked about when it was 30 bucks, buy 60 call options out into the leap year. And this baby not only went at 30 bucks, bought 60 call options and went to 60, went from $1 to like $8. Then we redid it and this thing went stratospheric. So is Newmont setting up the same? You betcha. More expensive product, but it's still setting up the same. And here's your weekly. And we have a low, we have a high, we got a 618. Let me run that again. That's a 3.2. I'm going to run my 2.2 from that low up to that high. 618 magic fibbo combo meal. Maybe we get all of these. Maybe this thing could go on the next dip into the 70s. And we get the 618, 786 combo bounce off the weekly. And then that would set up my 3-point tool. 3-point tool. Low, high, higher low. And that potentially sets us up at 179 upwards to 243. Both of those sound very appealing. You mean to tell me we could get into the 70s potentially and bounce and at least go $100 higher to 179? Yeah. 190, 200. And if it's the perfect combo meal 618 combo bounce, then it could push to 1618 up there 240. Love it. And last but not least is the other one. That's AU. I like them all. They're all setting up the same type of move. Notice from that recent low up to that high, who's sitting in the neighborhood of another push lower, kind of sloping upwards. We're only a few dollars off, 58 to 63, only a few bucks off. We grind up and this starts going this way. We grind down. We get a little 618 combo weekly bounce. And that would set this one up for 3.2. You have a low, you have a high, you get a higher low. 164, 179, 193, and we get real feisty, 229. And I'm doing what? Buying potentially in the 50s, 60, 50 range to 200. That's over a 4Xer, 5Xer. I like it. Even if it just gets to 164 and I'm buying at 50, 60 on over $100 run. I like it either way you slice it. So again, guys, no buy, sell to hold. Can't tell you what to do, but these are setting up. I just think it would be better if we get that last little push. We may not get it, but if we do, perfect time. So could I nibble? Buy a little something at 80 bucks? Sure. What happens if I buy a little bit at 80 and the next thing I know it's pushing into the 60s? Do I panic? No. I just look to the heavens and go, thank you. Then I could buy some more dollar cost average. Buy some at 80, buy some at 60. My net, if I'm buying the same shares, would be 70. And then when that baby goes ripping up to 170, I still make my $100 over 100+% gain, like 150% gain getting up there. All right. So again, all of these are based on underlying of gold. And this truly looks better because I have it on my chart. Right, Hal? I've been saying it for what? You go back a few months ago or several months ago. Gold train's never going to stop, dude. Just buy gold. You can't go wrong. Just keep buying. And I warned you after that parabolic move, we were going to get a gnarly looking correction coming back down. And sure enough, spot on. Then after the big whipsaw and the push up, I said, don't think that's going breaking all-time highs again. Look for some lower lows. And even after that, I said, as long as we're below 5,000, we're going lower low. Stay below 5,000, we're going lower low. We got it. Then as we start to zoom this in and we look at that most recent price action on the next bounce, and we said we stay below 5,000, we go lower low. Then when we got this next bounce over here and we got this, I said, as long as we stay below 4,500 in the magic fibbo, we're going lower low. So we've been watching these lines. We're still going and we're not quite reached where I thought we might go. At kind of 3,800 was 39/37, 38 is kind of the sweet spot. So Harold, could we have bought down here? Yeah, we did get a lower low, so that's fine. But I warned you that that's probably not the low yet. And all this overlapping chopping still looks like a little bit more push would be ideal. So if you bought some at 4,000 or whatever, that's fine. Just hold it. And if we do get down to 38, buy some more. We go any lower than that, look to the heavens and go thank you and buy more. Keep dollar cost averaging, whether you're buying gold bars from Costco, ETFs, however you want to buy it, miners, we just showed you. It's setting up a next big run. And where's the run going? We got to go like to a weekly chart. We're expecting gold to make a run towards 7 to 10,000. I'm about 1,000% confident on a 100% scale. Gold's going to make that 7 to 10 target, but I'm not convinced that this is the low and we're ready to do it just yet. I have no problems buying it at this price, but I still would like to prefer to buy it at 38 instead of 4,000. And anything lower than that, I'll keep adding, and it goes lower, which it probably won't. I'll go lower, but 38 may be the end if we can get there. The next lower low may be the end, my friends. So could we just chop around in here for a while and get that fall in the fall and set up the reversal? Yeah, that could do it. Kind of fits with Bitcoin too. Bitcoin gets its 50 to 30,000 plunge. Gold gets its final push lower, and then we look for the bounce. So we're in the nibble zone. So if you bought some, don't panic. That I even warned you in the last several weeks. You buy here, probably going to rally and then make another lower low, rally and probably make another lower low. And this still looks like we need another lower low. Silver, pretty much in the same boat. We got the lower low. Could that be the end? Possibly, but this still looks like, come on, what's flush down here to the magic fibbo? Remember we drew that a while back, looking for that weekly magic fibbo, and that looks good for us to do that. So Emil, what happens if we get silver to dip down into the 40? Anything below 50 is a steal of a deal. We may not get it, but boy, set an alert at 50 bucks and lower. What happens at 50 bucks and lower? That is an unbelievable deal. Start adding. You can do the same thing with silver. There's ways to play that one. AGX, AGX, AGQ, AGX, silver mining. And this would look better to come down at a weekly magic fibbo. Why? Because I said so. Well, that's not the one. It's AGQ. That's the one. That's the leverage one. AGQ. Yeah, ultra silver. You want some speed and a little more gusto with the rip. This thing went ripping, and I warned you when it was up here, did I not? Saying this thing is parabolic. Be sure you're taking your profits. This thing is coming down. Psychology of a market cycle. So where do we bottom on this thing? I'd like to see it come down and make another lower low. So go back to the daily. I like to see another lower low. Maybe we push toward 50 bucks. If silver can get the push, extra silver, we get this little leverage product that ultimately pushes this lower. So is this nibble zone for this? Sure. Nibble zone's fine. But if it goes lower and it hits 50, I'm buying more. It goes any lower than that, I'm looking to the heavens and going, thank you. And then we could buy shares so we don't have to worry, is it going to be 6 months, a year? How long is it going to take? But I believe very highly that even in a leveraged product, silver can go breaking all-time highs. And Harold, remember what Ethereum did on ETHU? Even if we just get a 618 to 786 type of retracement back on that. What if that silver does go breaking out to that 150 to 200 target, but this leveraged product, because of this massive oversell being leveraged, that all it can muster is a lower high instead of a higher high like silver underlying. Well, imagine we're buying it at 60 and 50 and it goes to 284. Would you be happy? Or, whoops, right there, 284. Or it goes up to 348. Could go higher, but even if it just does that, I think you'd be thrilled. So there's a lot of ways to play gold and silver. And let's finish up with, last but not least, Mr. Bitcoin. Be careful with this. I don't think even with this big bounce that this is the end. Maybe we get this little up move retracement. We get toward the extensions. At the highest I think we might get is toward that magic fibber that's sloping downward. And then I still think it's going to sell off to go lower low. I'm still expecting Mr. Bitcoin to be down in that 50 to 30,000 range by October. That is the time frame we're looking for. All I can say is whether it's this week, next week, October, whenever it hits 50,000, I'm buying. It pushes to 40, I'm buying more. It dips its toe in the 30s, I'm backing the truck up. And what do we know about Bitcoin? Go out to the bigger picture. Every 4 years, Bitcoin has a halving. 12 to 18 months post halving, it makes a run. Crypto winter low. This was the last one. I kept preaching day in and day out. Bitcoin below 20,000 is like committing a crime. It's a steal of a deal. Buy below 20, you're gonna hate yourself if you don't buy it below 20. This thing was projected to go to 150, and we were a little shy of that, 126. But hey, buying it below 20 and went to 120 and above, that's nothing wrong with that. So we put this nibble zone long before we topped out. We talked about this nibble zone. And that's where I think we're headed. So whether it's today, tomorrow, next week, October, November, any day, any week, any hour, Bitcoin hits 50, nibble, hits 40, buy more, dips its toe in the 30, look to the heavens and go, thank you, because it's a rinse and repeat of this. And then we're going to hold it till fall of 2029. And we're expecting to be up above 200,000. So that's the plan. And we can go back in history every time, even on these over here, which doesn't look like much. You span this out, you get the massive run up, 12 to 18 months post halving. Then you get the crypto winter low. You start grinding from the low into the next halving, 12 to 18 month run, correction, 12 to 18 month correction. So we're going to bottom in 2026, ideally October is kind of what we're thinking. And then we go ripping higher into the stratosphere by 2029, next halving May of 2028. Rinse and repeat. So we buy low, sell high, buy low, sell high. And if you go through the work here, we topped out in 17, we topped out in 21, we topped out in 25. So when do you think we're going to top out next, Emil? 29. And then these bottoms came in 14 and 18 and 22, 26. So when's the next bottom after the next high? In 30. And we're going to buy low in 30 and sell high in 33. Rinse and repeat, right? That's what we do. All righty. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Don't forget about your tools you have within the toolbox. And this is just chopping and grinding right now, but these things set up and it does everything automatically for you. You have the NinjaTrader right here, and we looked at COPX. Did I change it off of that? Where's my, there it is. COPX, Emil, I'm glad you brought that to my attention. But again, I think a lower low would be ideal, lower low than that. And then set up for the potential combo bounce. If we can get it down into the low 60s to upper 50s, and we're anywhere near that weekly magic fibbo down here, then you can see your extension opens the door up here to the stratosphere up in the 160s, potentially. Huge, huge opportunities. So I'm definitely looking to start nibbling on gold, silver, all of those ETFs, Bitcoin when it hits 50 and lower. And that's where I'm looking to hold for the next few years as this baby and all of these respectively go ripping higher. So with that, good luck. God bless you. I'm humbled and honored to be your mentor instructor. Join us again tomorrow. That's it. That's all.